William Ackman, the high-profile activist investor, has taken a $5.5 billion stake in Mondelez International. That's the company that makes Ritz crackers and Oreo cookies. The Wall Street Journal says Ackman's Pershing Square Capital now owns 7.5% of the company's shares. Joining me now with his analysis is Bruce Goldfarb. He's president and CEO of Okapi Partners. Bruce, thanks for coming in.
Thanks for having me, Sasha.
Among other things, your company represents activist shareholders, especially in proxy fights. What do you make of Ackman's move?
Well, we work for activist shareholders and we work for corporations, and I think what Ackman's investment is an indication of is that activism is here to stay. Activists are going to take bigger and bolder positions in larger companies, and we've seen this not just with Ackman recently, but also with Dan Loeb with his investment in Baxter. We saw it with Jana with their investment in ConAgra, and we're going to see this as a continued trend: bigger positions, larger companies.
Some other large institutional shareholders have stakes in Mondelez, including Fidelity, including Vanguard. When you've got big institutional shareholders, what do they tend to do? Do they tend to like change, or do they tend to like kind of the status quo?
Part of the process when you make a large investment is understanding how other investors think and behave. Some of these investors have an opinion where they really like the company, they really like what the company is doing, and other investors say there's potential for value to be created here, and we appreciate the catalyst that an activist brings to these kinds of campaigns. And we're going to see here, as Ackman potentially reaches out to these investors, there are going to be differences of opinions, but there's going to be a view that anything that can help enhance value is welcome.
And speaking of shareholder value and the company's stock, Mondelez seems in a pretty strong position. The shares are up about 30% over the past year, and even more than that since they split from Kraft. How vulnerable would a company like Mondelez be to a strong activist like Ackman?
Ultimately, activist investors are deep, research-oriented, value-oriented investors, and if there's a belief that even a well-performing company can perform better, then there's a potential opportunity. And so even with good performance, it doesn't mean that there's not the opportunity for continued growth and value enhancement. The difference may be if you look to wage a proxy fight, some investors may say, you know, we're happy with where things are. On the other hand, a company, especially a company that regularly communicates with their investors, is going to say, we're always welcoming new ideas. We're happy to hear about other ways where we continue our plans and grow and move forward.
So it's really a process that it seems is based on, anecdotally, the mix of shareholders and the position of the company.
That's right. When we work with clients to understand whether a particular company is a good target for an activist campaign, for a proxy fight, we really look at the mix of shareholders of the company, how those investors think and behave, and whether or not it makes sense to be really active, whether or not you've identified areas where the company truly needs change or just needs tweaking. And different investors have different opinions about how far along they want to go, whether or not they'd be supportive of wholesale change as they were, say, at Darden, or whether they would just prefer a little bit of incremental enhancement that can unlock some more value.
Some great perspective. Thank you for giving us your take on this.
Thanks, Sasha.
I've been speaking with Bruce Goldfarb. He is president and CEO of Okapi Partners. I'm Sasha Salama for TheStreet.